The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, I was not a huge fan of all of the closing action on Wednesday in grains or in livestock for that matter. We did fall off a little bit, especially in the soy complex, and then throughout cattle and hogs. We saw energies in the stock market pushing a little bit lower into Wednesday afternoon, seemingly having a little bit of effect on the trade. We have a lot to go through, though, and I'm sure our guest analyst here today has plenty of thoughts to share with us on everything that's going on right now. We welcome in our good friend Mike Zuzolo with Global Commodity Analytics. And Mike, great to have you back on the show, sir. And I don't know, are you with me or not? I wasn't a fan of some of that closing action on Wednesday's trade.
Yeah, I mean, I think this report is really getting under people's skins in Chicago because we saw a noontime model update that showed on the GFS that not only were we going to get a little bit more rain in the primary corn belt, but it was going to stay cool. And I think the trade's starting to get a little more nervous because they're hearing it from producers. I'm certainly hearing it from central Kansas all the way over to northern Kentucky about planting issues, emergence issues in corn especially. And so I think the trade wanted to give the market a little bit of short covering rally to price that in, but I think they kind of swung back around like a pendulum to what's going on in the wheat, what's going on in the crude oil. And we've got this Friday report coming out with everybody talking about 23, 24 supply demand numbers, especially U.S. supply demand numbers. And they look big from most of the trade analysts.
Well, let's stay on that topic here a little bit, just because I think it's one of the big elephants in the room here is this May report coming up on Friday. A lot of folks, this is a big report, has implications for both the old and especially the new crop balance sheets, as you alluded to. I'll pull up on the video feed your estimates along with the news wires. And Mike, to me, there's a lot of things that could happen with this report from USDA. One of the big ones I'm watching is, what does the USDA do with export demand? I feel like with the recent China cancellations on corn, they got to cut export demand on Friday, don't they?
I think they do, and I think that's why the front end was punished so much after the weekly export inspections were so weak, Jesse, and then that was followed the next day by those Chinese cancellations. I think the big thing that we're going to have to consider, though, in 23-24 corn supply-demand numbers is what is the ethanol number going to be now that we've gotten the E15 summer blend here for this current marketing year, and what does USDA do with that going forward? And so, you know, you look at this table and nothing really pops out at you until you get to the wheat ending stocks number. And I'm about half of where the average trade guess is. That is the heart and soul of the analysis right now as far as what's going to give us the potential to rally. I think it's going to be an all wheat yield number that goes down. I'm at 42.7 bushels. Why is that? Because the USDA is using 49.2. They told us back in February that was up 6%, and it was a trend line yield. And so I think the trade probably could deal with a 45 bushel yield and not get too shooken up about it. But if they went below 45 on Friday's report, I think the trade would be very surprised. And I think that would start making the trade think about the idea that hard red wheat, spring wheat are impacting the all wheat number now, and we don't have as big a supplies here as the trade's been kind of whistling past the graveyard thinking. So that's the heart and soul of Friday's report is all wheat yield goes down, maybe surprises the market, and that gives the corn the ability to kind of wake up. And so that's the big issue for me on Friday, along with those export demand numbers you bring up.
Well, and you bring up the concerns about KC wheat and that HRW crop under heavy drought, and then the planting delays for spring wheat. And we've seen here the last few sessions now support in spring wheat and Kansas City wheat. And let's look at another chart here that you have for us. This is a chart looking at lead month corn and lead month SRW futures. And to your point about the spring wheat and the KC wheat, feels like that they're the ones that are going to wake this corn market up, as you just said. So talk about that thought a little bit more here, Mike.
Well, the neat thing about this chart is how closely these two resemble one another. And this chart goes all the way back to 1975. And so even with the new fundamentals, the funds, everything that we've been able to throw into this marketplace the last 10 or 20 years, we still have a very similar chart pattern between soft red wheat and corn. And that goes back to the feed. It goes back to the fund investment, something you and I have talked about a lot, Jesse. Notice how the soft red wheat this year, after coming off of 6 straight years higher close, has now tested the 10-year moving average. Notice how far above the corn is. The top chart, that chart shows how far above the corn price is from the 10-year average. And so that's why the wheat, to me, is such a great indicator now, because it's done the damage, technically tested major support. Hard red wheat has rallied over $1.40 now after today's close in the May. Just a few contracts traded, but we were able to go above 930. So we're nearly $1.50 higher in 6 trading sessions, but soft red wheat has yet to really launch. And that's what I'm waiting for in Friday's report. That's why my average corn price is so much higher than USDA. I've got the average corn price at $6.15. USDA gave us a February base price, average price for new crop of $5.60.
Well, another aspect here as well is you and I have talked about wheat being the leader in these markets. We've hit on that point. I feel like 6, 7, 8 months now, and I am in agreement with you on this. We haven't brought up the Russia-Ukraine situation. I know that's another aspect of this. You shared this chart in your Tuesday evening blog, and I just want to touch on this real quick because that's another piece. All the geopolitical issues, whether it's Russia, Ukraine, whether it's China, etc., that's another piece that's a backdrop here that maybe is moving to the back burner just a bit into this report, but I know it's still going to be there after the report, Mike.
It is, and I think that though this chart really shows us pretty clearly by European wheat being at 675 in lead month futures that they have no premium whatsoever in the market. We're back to July, August 2021 price levels. This chart shows us very clearly on a weekly basis. This chart's been oversold, and that's the white and the purple line down on the bottom. We've been in single digits in terms of the stochastics ever since the third quarter of 2022. And so I think it's not hard for me to envision the EU wheat ready to launch and go higher, and then that triggers the soft red wheat to realize that the spring wheat and the hard red have already started to go. But I think the fuse that needs to be lit is this European wheat. One piece of good news that came out today, Jesse, I'm not sure the trade really caught it, was that the European export numbers came out for April, and it was actually up 11% year to date for the marketing year after showing April's numbers. And you get the idea that there's just no demand, but yet we're seeing these big tenders once again, and the Europeans are enjoying some really good business again.
Mike, I just want to touch on this as well. I know you posted this chart in your Tuesday night blog as well, the Bloomberg Commodity Index, and you and I have been looking at this here almost every week. So I just wanted to touch on it. Anything new you're seeing with this chart as we look at things here today?
No, I mean, we've gone down and made a new multi-month low with this month's trade, but we've been able to snap back and get close to the pennant, that apex or wedge point in the chart. And it really does suggest to me that the May USDA report is going to play heavily. The Black Sea Grain Initiative, the debt ceiling issues, it kind of makes sense why we're coming to such a point right now. But we've got about, I think, one more chance to find support here, heal this chart up along with some other commodity index charts, and then bring in the funds and bring in the long commodity risk on mindset. And today's CPI data would suggest that the Fed is going to stay on hold. The trade took it that way. And that kind of gives you a little bit more of a tailwind to try and come in and price in and buy into some commodities and add it to your portfolio if you're a fund manager, especially if you're looking forward to a recession come the end of third quarter, first to fourth quarter.
Well, we are having a conversation today with Mike Zuzolo of Global Commodity Analytics. Mike, you brought up the CPI data. I want to just touch on that a little bit more. It felt like that really stabilized the outside market trade early Wednesday, but then we started to fade a bit as we got into the afternoon. Do you think that the market took the CPI data and then something else kind of hit that outside market trade in the stock market, or is there something that I missed there? Because that CPI data looked like came in at analyst expectations, as you alluded to, everything pretty much in line. So I'm wondering what was kind of driving the outside markets a bit lower Wednesday afternoon.
Yeah, it was quite concerning to me to see that kind of a flip, and the crude oil was down over 2%. We did build some stocks in terms of the supplies overall in the energy weekly report, but not enough to really turn the tide or the momentum back to the negative side. I think one of the big things that the trade can't seem to let go of or shake off is this recessionary fear. And I think we just had some short-term traders come in and try and take advantage of that knee-jerk reaction, that friendly reaction on the CPI. I mean, if you look at the core CPI, what was still elevated, it wasn't commodities. Commodities are back to around 2% now, year over year. What was really elevated was things like house rents and apartment rents and things that are very sticky. And I do think the trade probably drilled down in those numbers as the trading day went on and thought, hey, I just made a little bit of money. Let's take some profit here on the long side and see what the end of the week brings us with this debt ceiling issue.
Well, one other thought I want to run by you in grains before we go to livestock. I've heard a few people kind of a little chatter about this early this week, that there's a feeling maybe in this grain trade overall that some are thinking the U.S. crop is made or acting like that when it's the middle of May and we still have halfway to go or more in planting progress. Do you get that sense in the trade that there's some traders, funds out there that feel like this U.S. corn and bean crop and wheat too is already made for the upcoming growing season?
I do think that, and I think they're wrong when it comes to wheat. I don't think they know when it comes to corn and beans, and that's really why I'm putting a lot of my chips, so to speak, on the table for the USDA to give us some tighter supply-demand numbers for the wheat, Jesse. But the big thing we want to watch, we've talked about the spreads. The corn and bean spreads are still very red hot. I mean, the May-December corn spread, I think, got to 125, 130 today. And I mean, it's just showing us that the cash market's extremely tight. We're still running a 65-cent over basis here in Atchison at one of the mills. I think the key, though, really goes back to when you look at the spreads. Notice the soft red wheat went back to a carrying charge market. May is cheaper than July. We haven't done that yet in the corn and in the beans, but we may be on our way to doing that. And that's why I need the wheat to pick it up here so that we keep the inversion, that premium in the front end for the corn and beans. Otherwise, I think they will move into a soft red wheat looking type market where you push all the premium into the back end and you take it out of the front end. And May reports are notoriously full of conjecture and very, very nerve-wracking because it's the first time we see 23, 24 or the new crop supply demand tables since going all the way back to February. So we're putting about 3 months of uncertainty together in one crop report.
It's a little bit like throwing darts at a dartboard, essentially, with this May report, especially on that 23-24 crop number. We'll see what we get on Friday. Let's talk livestock. I want to give us enough time to talk about our cattle and hog producers. And one more chart on the video feed here today, looking at live cattle, ground beef prices. What's your take in this cattle market? A little bit of a down day Wednesday, but it just feels like this market continuing to chop around a bit here as we head into summer grilling season.
Yeah, you've lost your real strong cash bid, and I think that's because the retail market has really slackened up. And when I did my special livestock report that I got out last weekend, it was really amazing. We had a really strong correction in May of 2014, I believe it was, before we went up and made the final high late in the year. And that was because of the weakening consumption. And so this chart shows us the 50% fresh beef trimmings, and you're not going to get a report every day. That's why you have spikes down to zero every so often. But excluding those spikes, you see we've made a new multi-year high. We're actually the highest point now in the 50% category that we were back during the pandemic. That has now ignited the 80% ground beef, ground chuck, right when we get into summer grilling season. So what I'm wanting out of this market is we don't lose too much demand because of the seasonals in the beef side of the equation. But if we fill those gaps above the market where the April went off the board and the June came on as lead month, we make hay while the sun's shining and we get hedges in place, because the USDA numbers, the Tyson earnings report numbers, almost all the high frequency data that I'm looking at right now that's come out in the last 2 weeks is suggesting we're getting hit on the domestic beef consumption side. And if we'd lose exports, we'd be in a real pickle. And that goes back to that recession for the US and China, maybe both, maybe one, as we get to the last part of the calendar year. So that gap in that weekly cattle chart is something to really, I think, go after in terms of laying in hedges.
Well, and on the cash side of the market and cattle as well, just your thoughts there. Haven't seen a whole lot of activity yet this week. I'm seeing some 177 bids in Nebraska live and 275 dressed in Nebraska, but not much out there as far as bid activity in feedlot country. And that's been interesting to watch the last couple of weeks, as well as there's been a bit more of a standoff there in the feedlot country.
You're right. And if it weren't for the dressed weights going down pretty precipitously again last week, I think we'd be down in the fat cattle futures more, Jesse, because I don't think the bids in Nebraska would be that high. Keep in mind this year, the bids in Nebraska are probably going to be the top end all the way through the year because of how tight that supply is. So if I hear a 177 bid like you and I did today in Nebraska, I'm thinking $3, maybe $4 lower for the rest of the plain states as far as what we can expect. But my take on cash cattle is that if the hog market bottoms, we go into summer grilling season, the packers will come back in and get some needs bought, because it is that time period. We're going to start our first big holiday in a little over 2 weeks, and then we get 2 more big holidays after that, and it should be a really good summer grilling seasonal, especially given the fact that the gas prices have kind of stabilized. Today's weekly update on the energy numbers, I think, showed that the 4-week implied demand for unleaded gas is almost 10% at this point.
Well, Mike, you brought up the hog market as well, and I just want to touch on that. I try to find something good to say here at Hogs. We had a nice outside reversal, a key reversal day on Tuesday that I thought was okay. We finally done it. And then Wednesday we finished slightly lower. I can't make any sense of this hog market, Mike, right now.
Well, the cutouts hanging in there. And, 82 has found some support. I think the best thing to say about the hogs right now is that we didn't give up all the gains from yesterday. And that really is where it's at right now. I see hogs and I see wheat kind of similar right now, Jesse. We've lost the supply in the wheat. The trade hasn't recognized it. We're liquidating the supply, I think, both here in the U.S. and in China because of low prices. And we're going to come around in 2024 and find a lot tighter supplies. I know that's a ways off, and there's really nothing to avert us now, I don't think, from liquidating some of the herd because of the low prices. But I think that we're carving out a low, and I think the summer low may be in at this point.
Well, great thoughts. We covered a lot of ground here today on the show. If folks want to reach out to you, Mike, and get some advice, check out your analysis. What is the best way to do that? And also, any final thoughts for us today?
Yeah, sign up at globalcomresearch.com, globalcom with 2 M's, research.com. I'll send you the most recent livestock special report I did last weekend. And then you sign up for a trial, you'll be able to get all the WASDE report numbers, and you'll get a heads up on whether this wheat market can turn the grains around or not.
Well, Mike, always a pleasure. Thanks for joining us here this week, sir. Have a great one, and we will talk to you again next week.
You too, Jesse. Thanks so much for having me.
Mike Zuzolo with Global Commodity Analytics. That's going to do it for today's Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.